From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 15th, 2018. Today we're taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. I've zoomed way out here on the weekly time frame so we can get a perspective of what the currency pair has been doing for actually about 2 years now, going all the way back to May of 2016. Easy to see this pattern zoomed out like this. Vertical red line, everything to the right of it, you can see somewhat of a range, a long-term 2-year range where it's been bouncing top to bottom within this range. So I wanted you to see that pattern before we go down to smaller time frames. Zoom it in a little here on the weekly time frame and you can begin to see how that plays out. We're down here towards the bottom of that pattern. So if the pattern starts to continue, we may look for the market to find support and start moving back higher again. So very interesting there. I wanted you to make note of the box at the bottom of the pattern, the orange shaded area at the top of that box. Take it down to the daily time frame and there's that orange shaded area here in between 69.35, 69.55, right where the blue trend line comes into play, connecting with the last two lows that you see here. We see the blue trend line, we see the orange zone, we see historical resistance into this area, so resistance helping us identify this as support. Fibonacci, just from the lowest low that you see here, bottom of the blue trend line, to our most recent high made just a few days ago, puts the 0.618 Fibonacci retracement level at 69.30. That's the bottom of the orange shaded area. So we have Fibonacci, we have the blue trend line, we have the overall weekly pattern, we have the orange zone, historical resistance acting as support. Look back here to the left-hand side. I'm just going to scroll back just a little bit here so we can see this. Take a look. Market was down all the way down here, bottom of the chart, bottom left-hand side of the chart, green zone, started moving higher. What I want to point out is this right here, and let's go circle it. This area right here, where it came up to the blue zone, dipped back down to the orange zone as support, and then began the next phase. So I'm not saying that that's what's going to happen, but what I want to say is that's fact. That happened. It got above the orange zone, hit it as support, and began the next leg of the uptrend. So we want to take note of that historical pattern, the long-term range we've been in. We see what happened the last time this market came back down on top of the orange zone within a rising move. So we want to take note of that. Well, first things first, I would say that this is not probably your best opportunity to go short as we're sitting into support. Not your best opportunity to go short. If you're going to go short, obviously you'd want to do it at higher levels. Either the purple, under the blue, maybe even a breakout under the orange zone would be your best opportunity to go short. So that's probably not your best opportunity to go short. And if it's not an opportunity to go short, maybe we look for support and maybe even just some intraday reversal to go back up, or maybe longer term. But this 69.55.35 level, to me, not an area for an intraday short, but potential an intraday for a long. Take it down here to the 4-hour time frame. You can see what's been happening. We saw the market dip way down here into the 69.20s, the low going all the way down to, let's see if I can get this to show up. Well, the low went down to 69.27 and then rally back higher. We suddenly see this infusion of buy orders, long wick on the bottom, blue candle. So for me today, all I need to see is for it to get back above this orange shaded area, and I believe we're going to see at least some intraday, if not longer term, reversal back towards the blue shaded area. So it becomes a potential long scenario above 69.55.60 to go back to the blue zone. The risk here is pretty easy. We don't want it to get back under the orange zone. If we decide to take the long and it gets back under the orange zone, we want to get out. So stop losses likely if you decide to take the intraday long, go underneath this low here. That way you can get out, look for a new opportunity if the market decides to go back in the other direction after taking a long. But I think we need to get above 69.55 before the long shows up here for the NZD USD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.